Hello, my name is Scott Hodge. I'm president of the Tax Foundation. I would like to thank Diego and the Instituto for translating and promoting the Tax Foundation's International Tax Competitiveness Index. This is the 7th year that the Tax Foundation has published the index, so it's worth reflecting a little bit on tax competition and what that means. The Tax Foundation didn't invent tax competition. If our index did not exist, governments would still compete to attract investment, build strong productive workforces, and grow their economies. Those forces exist whether someone is out there to measure how tax systems compare from one country to another. Tax competition can result in some messy policies, however. In the name of tax competition, some countries have set up special provisions for certain types of business income, such as patent boxes or incredibly generous credits for research and development expenses. Now, in response to competitive pressures, countries have also set up tax barriers to cross-border capital flows and placed high tax burdens on capital investment and saving. Those approaches to tax competition can lead to incredibly complex and distortionary tax policies that do more for tax accountants and lawyers than they do for average citizens and the economy. Now, the vision behind the International Tax Competitiveness Index is to channel competitive pressures into policies that simplify taxation, remove barriers to investment, and support economic growth. When countries compete on the economic principles that are outlined in our index, the outcome can lead to higher economic growth for that country, and it can lead to spillover effects as other countries learn the right lessons of tax competition. These are the lessons that Spain needs to learn. The approach that the current government is following by promoting wealth taxes, digital taxes, and a financial transaction tax is not the path to economic growth. If Spain continues to ignore these lessons, the country's ranking could get even worse than its current rank of 27 out of 36 OECD countries. Countries like Spain often rank low in the index because they tend to pursue policies that fight tax competition, and they reject policies that can improve their tax systems. Just as we are seeing more countries turn to protectionist trade policy, some countries are using tax policy in a protectionist manner. And we certainly see this clearly in the digital tax debate, where the goal seems to be more about taxing foreign companies than about following principled tax policy and fostering digitalization. It is time for Spain to embrace the competitive landscape in tax and move your system in ways that raise tax revenues, but do so in a way that doesn't punish innovation and hard work and investment. 2020 has created challenges for governments all around the world, and the pandemic has certainly left its mark on Spain's economy and finances. When the time comes to recover from the crisis, Spain should be prepared to accelerate your economic recovery by enacting tax reform policies that foster economic growth and avoid the kind of tax increases that would choke off an economic rebound. Tax policy can play a role, and the International Tax Competitiveness Index is a very effective tool for understanding how best to improve your tax system. Thank you again to the Instituto. We appreciate your using our research in such an effective manner. And someday we hope to see more competitive tax reforms in Spain to promote the growth in Spain's economy and to improve the lives of Spain's citizens. Thank you very much.